Learning is important. It gives you new skills. It gives you new opportunities. It develops your mind. It keeps you excited and motivated. It helps you grow. Did you make time for learning today? Once again, here I am, and welcome to Logos College Online Learning. I am Teacher Eric, and today we are going to learn and study about English for banking and finance too. Well, before we start, we have a review first. What did we learn last week? Well, at first, we discussed about the income statement. What does it mean? I hope you remember this one. As what I've said a while ago, we need time to learn. And I hope everyone now is ready to learn. What does it mean? Again, so income statement or a profit and loss is one of the financial statements of a company and shows the company's revenues, income, and expenses for uh, the things that we spend during a particular period. It also indicates how the revenues are transformed into net income or net profit. And it shows if the company made a profit or not. Okay, so these are the definitions for the income statement. Another thing that we learned last week was about cash flow statement. What does it mean? Is the third important document that companies produce. Okay, this is the cash flow statement. Next, it shows if the company generated cash. So if cash is enough for the operation of the company or a bank. All right, so this is just a bit of review that we have discussed or we discussed last week. Okay, before we start, uh, we are now in Unit 7. So um, we will have a brief description of what is the lesson or what are the lessons that we are going to learn for this unit. Okay, so before we discuss some useful words for this unit, I will just give you a brief overview about this unit on what we are going to learn. This unit deals with corporate clients, the particular needs they have, and the products offered to them to meet these needs. As such, corporate clients are generally treated individually and do not always use the standard products that are common in retail banking. For example, current and deposit accounts may be set up for multiple signatures or many signatures, right? And then and used differently from the standard private account. So this is the overview of this unit. And also, we are going to make suggestions for products for corporate clients. We also find out about credit lines, corporate loans, and leasing. We also talk about loan modifications or modification and company restructuring. Like we need to change, upgrade, or whatever the company needs to change or modify based on their assessment. And also we talk about or to find out about bankruptcy. Okay, now let's move on to the our useful words for this unit. First, we have bank drafts. We have letters of credit, bank guarantee, credit lines, leasing agreement, corporate bonds, loans, credit lines. Oh, two credit lines, sorry, and leasing. All right. First, you know, we need to take care of the corporate clients. We need them, or the banks need clients. So, in order for to keep them, we need to take care, or the banks should take care their clients. So, in this section, students are introduced to several of the products offered to corporate clients. For clients in the import or export business, bank drafts and letters of credit are very important. Bank drafts are checks issued by a bank rather than an individual and guarantee the beneficiary payment when the draft is presented. They are used when large sums of money are involved and the seller and the buyer do not have long-term business relationships. Letters of credit are documents that offer security to both buyers and sellers as the money does not change hands until both sides have met their obligations. A bank guarantee means that the bank will cover a debt if the person who has borrowed the money cannot pay it back. Next is credit lines. Credit lines are flexible loans in which a customer pays an origination fee but only pays interest on the amount he or she borrows. Leasing agreements are generally arranged so that a company can lease or rent new equipment or buildings without having to buy them. Corporate bonds are issued when a company needs to raise money. They sell them to investors and pay the investors back when the bond reaches the maturity date. Now, you students, you have to understand all of these useful words in order for you to get familiar of these words. I know we cannot learn this just once, but when you are working, I know these words will be recalled, especially when you are working at a bank. Now let's move on for about loans, credit lines, and leasing. Well, corporate loans can include short-term loans of up to 1 year or long-term loans, which generally run from 3 to 10 years, depending on the situation of the company and the lender or the people who borrow the money. These loans can be secured with real estate owned by the company or the individual, meaning that the bank does not need to carry out a full risk assessment. Borrowers can choose between variables and fixed interest rates, and there is a loan origination fee paid at the beginning. These loans are compared with leasing agreements, which involve borrowing tangible assets. We discussed this already. Tangible assets such as machinery or buildings, and credit lines, unsecured loans, which are flexible lending instruments. Okay, so those are another definitions and explanations for these useful words. Okay, now let's move on. I will just want to explain to you the first task that you're going to do for your homework assignment. First is you are tasked to do exercise 3 on page 52, vocabulary. So you are going to match words 1 to 6 to definitions A to F. So these are the words, 6 words that I think all of them have been discussed a while ago. So if you're just watching this video, you can easily answer this one. Okay, so we have the first word here for your vocabulary homework or task to do. First is letter of credit, yeah, bank draft, credit line, bank guarantee, leasing agreement, and corporate ban. Again, if you watch this video, the whole video, you can easily answer this one as I already explained all of this. So A, an arrangement by a bank to give a customer a specific amount of unsecured credit similar to an overdraft. Hmm. A debt security issued by a company sold to investors. Gonna be easy, man. A written promise by an importer's bank to pay the exporter's bank on a particular date or time after the goods are sent by the importer. I explained this already. Really, very easy. Letter D, a promise by a bank to pay a loan if the original borrower does not pay it back. A type of check where the payment is guaranteed because it is issued by a bank. And then an arrangement to pay to use equipment, buildings, cars, many more, rather than buying them. So this is your first task, and I think the video is quite long if we exceed more than 15 minutes. So the ideal videos that I made is only up to 15 minutes in order for you to not to be bored. Okay, I will continue this later with your other task for this week. Okay, and we'll stop for a while. See you next